Hi, Adam Khoo here. And in this video, I'm going to talk about how you can identify and trade trends in any market. So I'm looking at the Forex markets, but you can apply this to any market. And a common question I ask would be, how do you identify the trend? As you know, the trend is your friend. When you trade the trend, the odds are in your favor. So one of the things to do to identify trends is to really read the price action. Okay, so simply, an uptrend is defined by higher highs and higher lows. So in order to take a long trade on an uptrend, we want to see basically this pattern. Like that, right? So the price makes higher highs and higher lows. And we want to see at least two higher highs and two high lows to identify that it's on an uptrend. And obviously, when we're going to go long, when we're buying, we want to buy right here at the correction point, and we want to get in before the next impulsive wave up. So this is known as the impulsive wave. The impulsive wave is the wave in the direction of the trend. So there's impulsive wave, there's a corrective wave, impulsive wave, corrective wave, and it continues on. So we always want to identify impulse, correction, enter on the correction to write the rest of the trend up. Okay, so once you identify that wave pattern, the next thing is to know what's the precise point to enter. So how would you know that this is really the low of this correction point, where you're looking for a reliable support level? So I look for a Fibonacci level, or I look for like a moving average level. And I also look for a candlestick pattern, like a engulfing pattern or a pin bar, to tell me that the price is reversing, and that's when I enter and I quickly take an exit over here. So for example, I'll risk what I call 1R. R represents my risk of my trade, right? So for example, if I'm risking 10 pips, I want to make at least 20 pips, right? So I'm going to risk 1R to make 2R. And essentially, that's basically one of the main strategies that I trade every day, which I teach in my online professional courses. Now, conversely, if I want to go short, I'm looking for a downtrend wave pattern. So a downtrend is defined as lower highs and lower lows. So I'm looking for a pattern like that. Boom, 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 boom. That's right, okay? So again, impulsive wave is the wave in the direction of the trend. So it's impulse, and then correction, and impulse going down, and correction going up, right? So in this case, I'm going to go short. So I'm going to short at the start of the, or rather at the end of the correction. I'm going to go short over here, and I'm going to ride the next impulsive wave down, right? So I'm looking for, again, a series of, there we go, lower highs and lower lows. So in order to identify a downtrend, I need to see two lower highs and two lower lows. Okay, so two lower highs, two lower lows, and I'm going to enter at this second lower high. I'm going to enter short at this second lower high. So again, how do I know that's a reliable level? Like, how do I know it's not going to go higher? Now, you can't be sure for certain, but I have a good indication of the top of the corrective wave by basically looking at, again, Fibonacci levels and moving averages to look for a resistance level. And again, I'm looking for a candlestick pattern, like a bearish engulfing or pin bar, to know the exact point when the price is reversing, to short over there and to take a quick profit over there. So again, when I short, I'm going to place a stop loss somewhere up there. So my risk, again, is 1R, which represents my risk per trade. Again, it could be 10 pips, for example. And I'm going to take profit at, for example, 20 pips. So essentially, that's how I trade trends. Okay, so the important thing is to be able to identify these wave patterns, right? The higher highs and the higher lows. And that's where some people tend to struggle, all right? Because especially if you're new to the Forex markets or any market, you may find it difficult to identify these patterns, right? Because of the choppiness, the intermediate noise in the markets. So you got to be able to identify, for example, boom, 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 boom. There we go, right? So higher highs, there we go, higher lows, there we go, right? So again, two higher highs, two higher lows. So at this point of time, once you identify that it's a clear support level, right? So again, how do you know? It could be a Fibonacci level. So like for example, this is a Fibonacci level, right? If you use a Fibonacci tool over here, and you start from the start of the impulsive wave A to B, there we go, right? So we got A, B, and C. This is exactly the 61.8% Fibonacci level, right? So for it to be a reliable support, for example, I want it to be a Fibonacci level either 61.8%, 50%, or 38.2%. These are the three key Fibonacci levels that I know that is a pretty decent support. Or again, I can use a moving average to determine the support level. So once I know that's a strong support, then again, I'm looking for a candlestick pattern to tell me that the price is reversing up. So in this case, I've got this very strong bullish candle that looks kind of like a bullish engulfing pattern, right? So that could be an entry to take a trade over there, right? And then your stop loss could be here, and you're targeting again, 1R to make 2R, and you can see this is a pretty almost a perfect trade, right? So you enter there, and you exit somewhere there, and get out, right? So this is just an example, of course, right? Now, for some people say, Adam, I find it hard to identify the wave patterns. One tool that you can actually use that's quite useful is called a zigzag tool, and I've actually let me just put it in there. All right, so yeah, so that's a zigzag tool, by the way. Right. So this zigzag tool that you see, it helps you to identify these patterns. Like so. Okay. So it identifies again higher highs. So in this case, it's higher highs and yeah, higher lows again. There you go. Right. So got higher highs, higher lows, waiting for pattern to take a trade. Okay. So let me give you some examples right now of how I'll identify these patterns. So what I'm going to do is I'm going to just zoom out, right, and I'm just going to scroll back some time to the past. Right? Let me scroll back. Okay, so let me just zoom in, and I'll give an example of what we're looking for, right? Okay, so we're looking for, again, higher highs and higher lows for an uptrend. And again, I want to see that the moving averages are in sequence, with the smaller moving average above the bigger moving averages, and ideally they're sloping up. For a downtrend, I'm looking for lower highs and lower lows, with the moving averages in a downward sequence, right? The bigger moving average is above the smaller moving average. Now you can see, for example, over here, where we stopped, yes, you can see higher highs and higher lows, right? But at this low point, there's no reliable support because it has broken the moving average and it does not look like a Fibonacci level. I can see from experience it is not a Fibonacci level. It takes experience, right? But again, if you're not that experienced, then you would have to use your Fibonacci tool to draw A to B. And you can see that it has broken below the 61.8% level, right? So from experience, I don't really need the tool. I can just tell that it's not a Fibonacci level. Okay, so let me just delete that. Okay, so I'm going to scroll and we're going to look for a pattern that we can trade. Okay, again, you can see there's no pattern over here because it's lower highs and higher lows, right? Most of the time, the market is in a very random, choppy fashion, right? And we're waiting for that window of opportunity when the stars align in our favor, and that's when we take a trade. So sometimes I can look all day and not take any trade because nothing is in line. On certain days, I could take 3 or 4 trades. So it really depends on the pattern appearing. So I'm going to show you the ideal pattern that I trade when I look for it, right? Again, I don't see a clear pattern. Now over here, you may say, hey, that's lower highs and lower lows. Isn't that a downtrend pattern? Yeah, but the moving averages are not in a downtrend sequence. You can see the moving averages are jumbled up, and the smaller moving average is above the higher moving average. So that's what we call a divergence, because the wave pattern's going down, the moving averages are going up. That's not a clear sequence. So we never trade when there's a divergence between price action and moving averages. I want to see a clear direction. Okay. Now over here, this could be a potential trade. I'm just looking at that. You can see it makes lower highs and lower lows. There we go, right? And the moving averages are in sequence. And you can see that currently the price is finding the resistance at the moving average, and there is a bearish pin bar pattern, all right? So that could be a potential trade. So I could place actually a sell order. Oops. I could place a sell order somewhere at 2414, right? And I could put my stop loss somewhere up there at 24. Let's get a calculator. Not too good at mathematics. 2414. And I could put my stop loss at 2422. There we go, right? So I'm taking an 8 pip stop loss, right? So I'm going to put my profit target somewhere here, which is about 2 times my risk, thereabouts, roughly, right? So that's 1 to 2. Let's see if it hits my profit target, right? Okay. You can see that I got stopped out of this trade. So it did eventually go down, but it went up first, it hit my stop loss, and it went down. So this is known as a losing trade, right? So you can follow the rules and get a losing trade, and that's trading. So I'm going to put a -1R here to indicate that my first trade was a loss. Okay, so that's fine. Oops. And let's move on to the next trade. See if we can find one. That's not a Fibonacci. It's making lower highs and lower lows, but that's not a Fibonacci level, I can tell. Okay, so right now the moving averages are not aligned with the price action, so I'm going to wait for it to be aligned. No, higher highs but lower lows. That's not in sequence. Okay, hold on. Okay, there we go. So there we go, higher highs and higher lows. Right, so we have got that uptrend wave pattern. We have the moving averages in sequence, right? The smaller moving average above the bigger moving average. And you can see over here, let me just rub this away. We have a support at the moving average. So that's a reliable support. And this is like a bullish pin bar, all right? So that is a bullish reversal pattern. So let's attempt this again. Oops, hold on, let me just scroll back there. Okay, oops. Okay, so I'm going to put a buy order right above the high of that candle, 2411, and my stop loss would be at the low of the candle there. Just use my calculator, 2411, 2398. Okay, so 2411 minus 2398. That's a 13 pip stop loss. All right. So if I'm going for 1:2, I need a 26 pip profit target. So 26 plus 2411 would be 2437. All right. So in other words, I'm going to put a profit target at 2437, somewhere there. All right. So That's my entry, my profit target, my stop loss. Let's see if we can reach the profit target, or will it be another losing trade? All right, so there we go. So hits the profit target, so that's a winning trade. Right, so plus 2 R, and again R is a measure of risk. Okay, so on to the next trade. And again, in trading, you don't have to be right 100% of the time, right? If you can just be right 50 to 60% of the time, and you're risking 1 to make 2, you're making great profits every month, basically. Hold on, let me just build this. All right, so on to the next trade. Let's look for another pattern here. Okay, so again, you can see higher highs and higher lows, right? But I don't have a bullish candlestick pattern. I don't have like a pin bar or a bullish engulfing pattern. So, well, at least not yet. Let me just check. No. Let me just. Oh, went down. And again, you see the moving averages are not in line with the price action, so we can't trade that. We have to wait for an alignment of everything. Okay, looks like it's getting aligned. Okay, wait. I see something over there. Hold on. Okay, stop. I'm saying stop myself. Okay, so we've got higher highs and we've got higher lows. There we go. So we have got that uptrend wave pattern, and moving averages are in sequence, right? The smallest moving average is above the biggest moving average, and you can see that the moving averages are sloping up. So all the stars are getting aligned over here, right? And you can see that it is the current correction is finding support at the 50 moving average. And what is most important is I see a bullish engulfing pattern. That's called a bullish engulfing pattern. These are the things that you learn in the online professional Forex course, the different kind of candlestick patterns that we look at, right? So once I see that pattern, I can say, okay, I'm going to put my buy order above the high of that candle. So I'm going to buy at 2439, okay? And put a stop loss at 2424. Okay, so 2439 minus 2424. My risk is 15 pips. Okay, so I'm taking a 15 pip risk. All right, so my profit target is going to be 30 pips, so times 2 plus 2439. So 2469. Okay, so my profit target will be at 2469. There we go. All right. Okay, so that's 2R, and that's within the previous high, so it should reach there if it's going to go up. Okay, so let's see what happens. Fingers crossed. Yes, all right, great. So we hit our profit target over there. Boom. So that's another winning trade. Over there. Now, usually when I trade, I don't really use these zigzag lines because from experience, I can see the price action. But I'm just demonstrating to you here that if you're a beginner and you find it hard to read these wave patterns, these zigzag indicators could be useful to help you to identify them. All right, let's just look for another trade. Let's just take one more trade and see if anything comes up. Okay, now you can see that, oh, right, higher highs and higher lows, right? So could I put a buy there? Um, that's not a Fibonacci level. That's the thing, right? I can show you, I can tell you from experience, it is not a Fibonacci level. So I'm not going to take that trade. So it's got to be a Fibonacci level, ideally a 38.2, 61.8, or 50% Fibonacci level, right? So sure enough, you see it broke down, right? Not a Fibonacci level. It's got to be a Fibonacci level. Trade's broken down, blah, blah, blah. Lower highs, but higher lows. So no clear downtrend pattern. We got to see a clear downtrend pattern. Oops, I see something. Hold on, hold the phone. All right. So I see lower highs and lower lows. And I see a bearish engulfing pattern. Now, question is that a Fibonacci level? Let's take a look. I can tell it is probably a Fibonacci level, but I just need to confirm that A to B. Yes, it is a 38.2% Fibonacci level. All right, okay, so looks like a reasonable resistance at the Fibonacci. So I'm going to place a sell order here, for example. All right, it's going to sell right at the low of that candle, say at 2378. Okay, and I'm going to place a stop loss right above that at 2389. All right, so 2389 minus 2378, that's an 11 pip stop loss. Okay, so my risk is 11 pips and my profit target should be 22. So 2378 minus 22 is 2356. Okay, so my target would be 2356, somewhere below. So let's see if it reaches 2356. I'm not sure. Ready? Let's see what happens. Boom. Yes, it goes to 2359. Let me see. Did it hit 2356? Yes, just. Wow. That was close. 235. In fact, the low was 2355. Yeah, so just hit the profit target. There. Went up and went down again, so would have definitely hit the profit target over here. All right, so great. So that's another winning trade of 2R. All right, so to just give you an example again, you don't get winning trade all the time, but if you can get 60%, all right, or even 50, 60, 70% winning rate, and you're risking 1 to make 2, that's a pretty good profit strategy that you have. All right, so these are just one of the many strategies that I trade every single day with my students. We trade together, and it's one of the strategies that I teach on the online professional trading courses, which I have at piranhaprofits.com. So do check it out, and I hope you enjoyed this video. Alright, so if you like this video, you can subscribe for more videos by clicking on the subscribe button. If you'd like to enroll in our professional Forex trading courses, you can go to piranhaprofits.com. For live training courses in Asia, do visit us at wealthacademyglobal.com. This is Adam Khoo, and may the markets be with you.